Hey, rich friends, it's your girl Cha recording live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders. So, if that's something that you're interested in, you're going to want to make sure that you hit the subscribe button, leave me a comment to let me know what you learned, give me a thumbs up, but more importantly, share this video with another trader who you think that it will be helpful to. If you find that the videos are just not helpful enough, you can follow me over on TradingView, or you can register for personal mentorship. This information is down below in my description box. So in today's quick video, I'm going to be breaking down this EURJPY trade that I dropped in the chat for my rich friends. I believe I dropped this trade on Sunday, August 27th, and it was around 9 p.m. when I did start to analyze the market. So one thing I like about TradingView is that they do allow you to go back to the beginning of your trade idea so that you can actually reassess and figure out what went right or what went wrong. So in the strategy that I use and I teach in most of my videos, it does consist of 4 indicators. So you'll see 2 indicators at the top of my chart and 2 at the bottom of my chart. So these 2 indicators are actually the same. They just have different settings, and they're called EMAs, which you can find right here. If you'd like to add this indicator to your chart, you would just click on indicators and you would search EMA, and moving average exponential will come up. Now, the first thing I did on my first EMA was I changed the length to 50 and I changed the method to EMA. I did the second thing for the, I did the same thing for the second EMA, except the settings for this one is 200. Now, what you'll notice about the EMA or moving average is that it is an average of where price was for a certain period of time. And that period will either be 50 or 200 based on what we put in our settings. Now, if we look at this, we can see that when the candles, these things here are above the EMAs, the market tends to be going up. The market has something called support and resistance, and support is usually a place in the market where price will buy. So we can see that price came down to this area and it bought. Same thing here. We can see price came down to this area several times and it bought. We can see the same thing here and the same thing here. So when the candles are above the EMAs act as an area of support or a potential place where you could get in for a buy, versus when the candles are falling below the EMAs like here, the EMA act as an area of resistance or a place where you could potentially sell. And we can see that happened here. We can see that happened here. And we can see that happened here. So the EMAs are a really great technical and visual indicator that you can use to determine if you are going to get into that trade for a buy or a sell. So at the time when I was analyzing the market, I can see that the candles were above both EMAs, which was my first bullish confirmation, thinking that the market will go up. Now I have 2 line indicators at the bottom of my chart. One is called the momentum indicator, which tells us the momentum of the current market. And the second one is called the stochastic. Now, simply put, if these lines are facing up, it lets me know that the market is going up. So I can see that I already have 2 more bullish confirmations. Another thing you want to look at are these numbers. You do have the option to turn this setting on. And if these numbers are positive or above 0, which we can see here that they were, these will also be bullish confirmations. So when I'm using my strategy, I like to say that 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So I actually had more than enough information on this trade, so I did decide to go in for a buy. Now, I typically like to do a 1-to-1, 1-to-2. I like to do a 1-to-2 risk to reward ratio of 80 pips, which we can see. I use this tool for here. And we're actually going to play this trade out to see what would happen and when TP was actually hit, which will be when it crosses outside of this green box at the top. So we can see that TP was hit around Tuesday. So this trade did take some time to develop. However, it did continue to buy and go up even higher. So I could have secured more profit in this trade, but I did not. Now the market is currently coming back down, as we can see, but it is falling back into that area of support. So it probably will come back up. As you guys will notice from the market, it'll go up and then down, and then up and then down. So yeah, I really hope that this video was helpful. I hope that you guys learned something. If you did, leave me a comment. Let me know what you learned. Share this video with someone else. And remember that you can always register for a personal mentorship 24/7, or you can follow me on TradingView to stay up to date with all of my trade ideas. So until next time, rich friends.